Happy Friday, traders. It's 8:01 a.m. Chicago time on Friday, the 8th of October, 2021. This is episode number 2090. This is NFP Friday, non-farm payrolls, U.S. unemployment. The numbers came out this morning. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, hopping on over to the convergent trading. Guess it don't likey. Sorry about that. I love it when Windows updates the video driver right in the middle of trading. It's awesome. So we have the non-farm payrolls today. It came out at 194,000, which missed the forecast of 500,000. And the market responded in a very, very confused way. The scene of the crime for the non-farm payrolls on the S&P is 4398.5, and we have already sloshed back and forth across that price, and so there is no SOC this morning. And the other things that are in play here, potentially in play, is again energy. Still a problem. There is a spike in coal prices. There's a demand for coal prices now. Big order from the government, and that's likely to be long-lasting. The expectation is that's going to be long-lasting and therefore inflationary. There's the issue in Taiwan, the escalation between the United States and China. In Taiwan, the U.S. sending troops over there. There are military, naval exercises in the Taiwan area. A U.S. submarine was hit by something yesterday, an unidentified object in the ocean. That's likely to cause some jitters eventually as it shows up on the news more and more. There's also the trade war between China and the U.S. And there you have it. Wonderful world we live in. So anyway, so the non-farm payrolls behind us, unemployment's behind us, and this is of course a unique Friday. The first Fridays normally the non-farm payrolls, but since October 1st was last Friday, it was moved to today. What's left today is the 10 o'clock wholesale inventories, 10 o'clock for August. And currently the S&P is balanced. The profile overall is balanced. It is just crossing prices back and forth. It made a new high and a new low on the non-farm payroll release from 4407.75 down to 4382.25 on pretty decent volume, 316,000 contracts, 316,000 contracts traded in the S&P with 25.5 points of range. That's relatively low. That's still higher than the mode for the overnight range statistic, but it's quite a bit lower than what we've seen over the last few days. Yesterday's rally was refuted, and we ended up selling off into the close, and we extended that low into the gap a little bit lower this morning. As you can see, it's a mixed market. The posture is really mixed. The S&P is up 11.5 points at this point. It was down. The Dow Jones is pretty much flat, 10 basis points. The NASDAQ was relatively balanced going into the non-farm payrolls and has spiked a little bit higher, and so on and so forth. The treasuries are mixed as well. The 10-year note's up slightly. The 30-year bond is down slightly. The Bund is down slightly, and so on and so on and so forth. Here's what was expected yesterday. The primary scenario yesterday is we open up in this 4388 area. Expected it to dip down. If you recall, I told you that this area here is really important, an important test area. This area spans about 43.83 to about 43.70, expecting the market to dip down in there and find support for a push to 15 at least yesterday. So I was looking for a small dip, consolidation, and a rally into the gap mid, which is at 44.15. That was the primary scenario. Here's what it actually did in yesterday's action. This is yesterday's action. As you can see, there weren't that many rotations. There weren't that many rotations yesterday. It can fit the whole day, and normally I would have it at 3 pixels per bar. Let's see. So 3 pixels per bar compression in the bars, and here we could see that we could fit the whole day in about 2/3 of the screen. That's just kind of a rule of thumb here, using the 4-tick Renko to judge how many rotations or how much activity there was yesterday. It was really muted. We did leave behind a gap zone as expected. Right here, we hit we created an IB low of 43.8675. So we never actually fell into that 83-ish to 70-ish zone. We took a small pop lower from 88 quarter open to 86.75 low, and then we pushed higher, and you can see it set up some pretty decent tests and retests. Yesterday was looking for the IB to break to the upside, and it's just no go here, as it just consolidated in the upper end of the range, creating this odd looking point of control and high volume node near the high. The high is relatively weak yesterday, and then it finally pulls back to the mid again. Looks like it's setting up for a retest of the 16 area and is unable before it falls through and then pulls back to mid, setting up a push into the IB low for the IB stat. The IB stat is there's about a 98, 97. That number is kind of falling lately. 97% historical probability that the first hour's high or low are breached, not touched, breached. And yesterday, they breached by a tick. Look at this market profile right here. One letter printed below the yellow line. The yellow line is the IB. One letter printed below the yellow line, so that was a one-tick failed auction there yesterday. But it did meet the statistic. It did fulfill that 97, 98% statistic, and we ended up finishing near low. So we had a multi-distribution profile yesterday, active price discovery, with a gap zone remaining underneath us. So if I turn on the master levels, boom, you see this yellow or gray area, gray shaded area, indicating that an auction has not occurred. We did go pretty far to fill in the gap from September 28th, but we didn't quite close it, so that gap remains in play. I'm debating whether to shrink that gap to what's remaining since we've auctioned the rest of it. I've never done that before, but may start doing that because keeping this huge gap open may be misleading on later days. But today, the finish yesterday was relatively weak. Into the close. Coming into today's session, as my laptop here is struggling to keep up. Coming into today's session, we reopen, we pop a little bit higher to 4,400 from below, and then we push that low at 86.50. We push that low down into 82.25, and then we were on our way to recovery, to coming back up before the non-farm payrolls came in, and we poked down, we pushed up, and here we're holding sideways. You'll notice that it is putting a higher low here into the current 30-minute bar, but it's still early. The market is really undecided about what to make of this non-farm payrolls number. That's where we are currently. So the high overnight 4407.75, the low 4382.25. It is shaping up to be a pretty um, low key day in my opinion. So that's where we stand. Hey, while we're at it, since it is non-farm payrolls Friday, let's do the thing where you tell us where you're located. Give us your city, state, or province and country. If you want to be contacted, please share your Twitter or Instagram or whatever social media. Do not share your phone number. Do not share your email. Those will be blocked. But if you want to be reached out to because somebody is in the area around you, please add your Twitter. That's the most useful way, and then people can DM you, and hopefully you can find a long-term trading partner that way. Anyway, so I'll let you guys do that before we move on to look at the overview picture. So what are we doing here? So as we look into, man, it's really annoying that this happens. Oops. It just reshuffles all of my monitors and monitor setup. So this is the overview chart. The top row are the indices, the major indices. I recognize the Russell's not up here, but I've got crude oil. Probably should get rid of the Dow. The Dow's really not cap weighted. I'm not sure why the world even uses that as an indication. It really is a pointless index. An interesting product to trade, nothing wrong with it, but for a representation of the market, it's price weighted. So if anybody does a reverse split, they become the highest weighted portion of the Dow because their price is the highest. It doesn't make any sense. The Russell's more in line, representing the small cap market. But as you can see here, since the beginning of the month, we are really playing out with the VWAP beneath current pricing. So you could see that VWAP is below the current pricing. So since the beginning of the month, we've been in this kind of retracement phase. The oil is pushing near highs, but really is getting tangled up. The gold is finally breaking away from its monthly VWAP here to the upside. We haven't seen that in a while. You can see gold has stayed underneath its VWAP for most of September, and so on and so forth. Treasuries still having a hard time finding a bid, therefore yields are rising or have upward pressure. You look at the currencies, same thing, remaining below their VWAPs. The cable is showing some strength. The Swiss franc is sloshing in the middle. The Swiss franc was relatively strong throughout, and the Japanese yen has been relatively weak throughout. The Japanese yen still dealing with this impulse down. That's the overview. Let's take a look at what's expected for today as we hop into our final segment of what our expectations are. Today, I'm going to temper my expectations. The key prices above and below for today are 43.65 below. So let's look at this. So let's put our map up. 43.65 below. This is a key test area. If we do fill the gap, and then above is 44.28. 28. These are the kind of big pieces on the map. Above there, we start to push. Into the 44.46, and below there, we start to squeeze into the 35. These are just the big pieces. We still have some play here in the 85, 86 area right here. This is what is this? This is the 80 actually, which is basically just below today's overnight low. And of course, the overnight high is stuck against this 08, 07, 75, 08 area. That's been a stock zone since yesterday. 08. These are the big pieces. This morning, the expectation is consolidate, pull back to the overnight point of control, and then squeeze this overnight high back to the point of control from yesterday, back into this 44.15. The point of control yesterday is 44.14 half. Looking for it to test the 44.14 half and to push the 28 before it finishes sideways, and we end up getting stuck in this former gap zone and filling it in this afternoon. I'm expecting this afternoon to be pretty slow. I personally am not sticking around today beyond maybe the first hour. I need a break. I need a mental health day off, so I'm going to be trading the first hour. I didn't trade the non-farm payrolls at all. I have never seen, it's been a long time since I've seen the S&P futures trading with 4s and 5s and 6s and 3s as liquidity in the bid and the offer at any given point. It looked like it was almost like a technical glitch this morning. I have never seen that in the S&P. I haven't seen that in the S&P since way back, maybe 2001, something like that. It's the thinnest I've ever seen. So there was just nothing to do this morning to trade this number. It was far, far, far too thin for this product. I mean, if anybody watched, or if you can replay, you'll see that the liquidity was just not there this morning at all. So pretty risky business that is. The secondary is an open auction that probably pokes the 08, tests the 08, consolidates, hits this noise, this zipper area from yesterday for resistance back to the overnight point of control, and then starts working its way to 80, consolidates, and then moves into the 65 before the bounce. That's the secondary scenario, 08 to 65, 08 to 65 potentially. Doubtful given the type of action we saw on the non-farm payroll release, but we'll see what these guys think as they come in. I doubt that this number has changed the way the Fed looks at the taper or anything at all. I seriously doubt it, so I think the market is not likely to reprice too dramatically today, but I could be wrong. Good luck today, and I'll catch you on Monday morning, everyone. Take care. Please don't forget to hit the like button and to subscribe to the YouTube channel if you have not done so. Take care.